All right, this is a video about the concept of torque as applied to investing. Obviously, the word torque is a term from mechanics, from machines, basically, a twisting force. But in investing, it's a really useful paradigm for how to think about the amount of risk you're taking and the amount of exposure you have to an underlying investment theme. So I'm going to give a couple different examples and then a more general example to how to think about this idea. So let's say you want to play gold, right? And you want to think about different ways to play gold with varying amounts of torque to gold. So sort of the lowest torque way to play gold would be to just own physical gold or own the gold ETF, right? And so if the price of gold goes from $5,000 an ounce where it is now to say $6,000 an ounce, okay, that's a 20% move, right? Which is fine, and that's great. Now, if you were to own, say, a gold miner, and that gold price goes from 5,000 to 6,000 and stays there for a sustainable period of time, the miner is going to be making a lot of money on gold and being able to buy back stock, and it's going to be sort of a more sustainable and more aggressive result in that kind of investment than it would be in just the underlying physical. So a miner that has plenty of gold supply over the years and can sell at these higher prices, earning more and more profit over their relatively fixed costs, is going to be a higher torque way to play gold. But then if you want something even more high torque, well, you would think about junior miners. And of course, we talked about these ideas in the prior video 157. So a junior miner, which only maybe hasn't really started the mine or needs some funding, this is more speculative. And if the gold price goes higher, the junior miners will have even more torque, obviously with more variance, because some of the junior miners won't make it, some will, etc. Right? So it's an even higher beta or higher torque way to play the idea. So we could also think about, say, you have a view on oil. You think the oil price is going higher. Same concept, basically. You can own, the oil ETF or something, some direct ownership to physical oil, or you could own, say, an oil integrated like Chevron or ExxonMobil. Those would be relatively low torque ways to play oil. These companies will do better with a higher oil price, but not massively better. And then you could think about, okay, the higher torque way to play oil might be to own some speculative E&P company, exploration and production company, that can't make money at a lower oil price, but when oil goes through where they're sort of the price that means that they can make money, in other words, if oil goes above where their production costs are, that stock is going to go up quite a lot. Likewise, you could own, say, offshore oil vehicles like Tidewater or Valaris, for example. So there's other ways to play oil that have more torque and different kind of contours, depending on the sustainability of the price move, depending on the nature of the underlying sub-industry of oil. And then I want to talk about torque in sort of a more general idea, more general concept. You could think about, let's say you like a given stock, and you want to play the investment in the stock itself. Okay, that is a low torque way of making an investment in a company. Not just a theme, but just a given company. And then you could think of, okay, a higher torque way to do this, to have exposure to an upward move in a company, would be to buy call options in that company, right? Obviously, there's more risk, but if the stock moves, the call options are going to move much more in terms of value, right? And then there's a spectrum here too. Like you could start by thinking, okay, a low torque option strategy would be an in-the-money call, whereas a high torque option strategy would be a way out of the money call if the stock moves up enough to go through that strike price, right? And there's more discussions on options, on some of the technicalities of what these terms mean. If you're new to options, you can refer to some other videos on this channel to learn more about that. But the point I want to make here is we can think in terms of torque with all investments because there are options on many stocks that allow you to have higher torque exposure to the underlying stock. And then the final example I want to give of a type of torque is to think of bankruptcy risk or how stable a company is or how safe a company is. So, for example, when the market is doing well or a sector goes into recovery, you can think about this in maybe the chemical industry or any kind of industry that shows cycles. The best and most established and the companies with the strongest balance sheets are basically going to be the lower torque version of playing a recovery in that sector. So you may want to even think about, okay, if I'm confident that this sector recovers, that means some of the companies that are closer to bankruptcy make it. And so a higher torque way to play this theme or this investment idea is to own these riskier participants or riskier companies in that sector. So yet again, this is another way to sort of increase your torque if you wish to. Sometimes you may actually want to dial back your torque and play the safer names because you don't know that the cycle is going to improve, that a sector is going to recover, for example. So you would stay in the lower torque ideas. And then obviously, if we take the options idea and apply it to this sort of financial stability idea, you could have torque on some level. You can own options that are on the riskier companies in a sector, and this would be the way to play it with a lot of torque, for example. Obviously, with the alternative, the other side of the coin here is that there's your risk is much higher, and so you may have more loss, right? So not to make any recommendations for any of these sectors or the ideas that I'm giving out here, they're just examples, but the central idea I want you to get is to think about what precisely you want to do when you make an investment in a theme, and how much torque do you really want to have? How much aggression or lack thereof do you really want to have when you play that theme? And this is really the central idea of thinking about torque with your investments, okay? As always, I thank you for watching, and I hope these videos are helpful.